Hello, welcome to Macro Point of View Commodity News, and in today's short video we'll take a look on the current situation about the oil, natural gas and the gold markets. So let's not waste any time and take a look on the candles, what's going on the market. So about the gold market, what we can see, it's a huge rise yesterday because of the CPI readings from United States, which was lower than expected, and it means that the current rates are significantly higher than current CPI level, which means will probably lead to stop the rising rates in United States. Of course, still over 90% of the market is expecting the rising rates on 26th of July this month, so it's quite obvious, but we also start expecting that it will be the last spike in rates, and at the end of the year or beginning of the next year we will see rates dropping, which is very good for the gold market. At the moment, as you can see, SMA 55 on the daily chart is current level of the price. It's very similar. It's about, on the moment of recording, it's about less than $2 difference, and I think we can say that the market will now have a support somewhere between $940-950, and it's up to 2000. Of course, it will be really hard to reach a solid rise of this price up to 2000 before Fed decision, unless there will be some Fed officials claiming that it will be the last spike of rates in this season. So unless that, the 2000 is currently target, but it might take some time, and it probably will be a very solid ride. So this is my point of view of the gold market, so let's do not waste time and turn into the energy market. And for the energy market, we'll start with rising prices of oil. Of course, it's also rising due to lower CPI, which helping the demand of oil products, as the price of other things will stabilize in United States. So of course it's very good for the oil prices. Also, weakening dollar after solid CPI and due to expectations of ending rates hikes in United States, it's also supporting oil. And also it's supported by Saudi Arabia, who extends their voluntary cuts of 1 million barrels per day for another month, for August, and there is also a voluntary export cuts from Russia, about 500,000 barrels. So the thing about Russia is that they will not drop production, they will only drop export, which means they will hold this oil in their storage and then they will export it on a later terms, which means they cannot hold a longer amount of time this export cuts, because they have limited oil storages. And also it will be bad for the market if the Russia will be sitting on a stockpile of oil barrels. But yet it's still supporting the price, which is now reaching and have a current support on $80, and it's really hard to expect anything at the moment, because we have almost unstoppable rise from $72 up to $80, over $80 today, and I think it might need some pullback. I don't know how big, right? If we have to check or look for some pullback, we can do something like a small Fibonacci chart, and then we can take a look that the small pullback about 38.2% will be around $77, which is not bad. Of course, it's under 5% of the price and of the current price, and it's reachable. Also, as we can see, $77, I think I can move this one up to $77. Take a look here. This market was fighting with $77 so often, and here it was really strong stopping point. So I think it might be a good idea that the pullback will be about $3. If we can expect it today, tomorrow, or next week, well, this kind of rising prices, about 12-13% of that we can see on this market, shouldn't be going without any pullback, without any retreat from the position, just to take some profits by the big players and then return to fight $80. So this is the oil situation on a Brent oil, and the natural gas in the United States is still inside. I know it's not a book type of inside bar. As you can see, we have a small breakout here, a false breakout, but okay, come on, it's not a pharmacy point, it's a market. It cannot be made by the rulers. Exactly. So for me, the situation is still consolidation inside them as an inside bar. And it's really surprising, because we had a record electricity needed in Texas on Wednesday, and it's forecasting that there will be new record on Thursday, 13th July, in Texas, which is 50% powered by gas, of course, due to high temperatures. And it should be rising everything. We had some significant, almost 10% drop on gas export from United States to Mexico, which is a bit surprising, because I was expecting that it will be over 6 billions cubic feet in for the whole July, but yet we've got rising better sending to LNG terminals. Of course, it's not on the top version, it's not on the top numbers, but it's close enough, and it's much higher than in June. So some of the maintenance works in those terminals are ended, and they were coming back. And of course, we are here to look for another supplying Asia and Europe with the LNG from United States. And even due to having Europe forecast 90% amount of gas in the warehouses in United Europe in August, I think there will be still some high temperatures in the summer in Europe, which will force countries to use more gas to provide electricity, to provide air condition, and also the same thing in Asia. So I think we will see some booming LNG needs, especially on the spot prices, for second half of July, maybe beginning of August, and it will be probably on a steady level up to October itself, unless of course there will be early winter that will start in October. Then it will extend further. If not, from mid-October to mid-November should be also some lowering needs for LNG gas in Asia and Europe. Yet, with still those prices, are really surprised that we are still in consolidation. We are still not reaching $3 despite all those fundamentals. So, and those weak production of natural gas in the United States, even that our Friday rig count shows rising gas rigs, about 11 active points, still the production dropped under 100 BCFD this week. It's 99.5 yesterday, so it probably will rise, and will still have currently demand oversupply in the United States. So those prices are really, really low for such thing, and I myself have some long position on the natural gas as well. Anyway, thank you for your attention. I hope you enjoyed. I hope you find it useful. Please do not forget to subscribe to our channel and stay up to date and follow for more new commodity news on macro point of view. Thank you very much and have a nice day.